Good evening, this is Melissa with the StockSwoosh.com, and tonight I'm reviewing the market for you. Beautiful, beautiful market. Well, let's take a look-see, should we? Should we actually review the market and see what's going to happen this week? I did a market review, gosh, like a week ago or something, I don't remember now. But I do it every morning in my trading room, and I look at the market. And I said you can draw a straight line through the market the last month. I also said that the market's going to make some kind of directional change and get out of this congestion in the month of February. But I must tell you that we have not done that yet. Okay, we haven't done it yet. In fact, I'm going to point something out to you that you may not see because everybody's excited. And we did a buy setup on the daily chart. And we ended the day green with a bottoming tail. And there was some kind of news alert that came out that the Dow rallied up this much and this much and this much and this much and do. The top of this bar is 67.79. The top of the bar is 67.78. That's not the close. We didn't run up here and it wasn't 3:59. We ran up here and stopped and came in and closed. But let's see the time that we ran up there. We ran up there and hit that number 145. So we actually had plenty of time to go over that number. And we didn't do it. Now, does that mean we're not going to do it? No. Oops. Doesn't mean we're not going to do it. Doesn't mean we're not going to do it Monday morning. But I will tell you that we must effectively gap and trade over here in order to move higher. And I want us to gap over here if we're going to do it. If we gap over here and move up, then I'm convinced we're higher. If I get up on Monday morning and the market is anywhere in this range here in the gap, I don't think we're gonna necessarily do it on Monday. Now, does that mean we're never gonna do it? No, okay. But we could have easily gotten over there on Friday. Why didn't we do it? It was 1:45. There's 2 hours left in the day. Plenty of time for the market to just continue. The market did not even, look, 67.79, 67.78. Do you think that that's fate or something or just a weird thing? No, that is within 1 penny. Okay, so that's not coincidence. Every time I look at this, I say to myself, I still think we're coming back in here, and I still think if we do it, then we're lower. Now, it certainly looks like we might hold here. It certainly looks like we might do it, but I must be clear that this is a base. This whole thing here that's still in play is still in the base. You don't buy until we've cleared the base. You don't short until we've cleared the base. Let it do it, and preferably in a gap. And if we can't get it in the form of a gap, and meaning gap over this and rally, or gap under this and fall, then wait till it trades and closes over here, or trades and closes under here, till you do something that you have an immediate direction. I will say that right now, if it is very, very, I'll tell you what's clear. It's not clear the market's going higher, and it's not clear the market's going lower. What is clear is that we've been trading in a range for the entire month of January, and it's formed a solid, squished down, squishy base that's tight. And if I drew a line right here, it would be perfectly straight. There it is, straight as it can be. So it's a base. Bases are very strong. If something breaks above a base, it's for sure higher. We'll take off like a rocket. If something breaks below a base, it's for sure lower, and we're going to drop. We're going to drop, okay? Wait until it does it, all right, to know for sure. I'm not going to say which way for sure until it does it, but I know once it does it, it's going to have meaning now because we've been in such a congestion. It's a base. I mean, it's not even like a miniature uptrend or miniature downtrend. Like it is a base. It's like a flat board, okay? And that's very powerful to break on either direction. So when it does, expect momentum and a move in the market, which we will get this month in February. Which direction, though, we have yet to be told. Everyone thinks we're going long because of the ways the SPYs have been rallying up. But I say that has nothing to do with the Qs at all because the markets have been very, very, very different. And the SPYs have been rallying up for quite some time and hasn't been able to lift the Qs. Why? Why? Okay. Money's sitting on the sideline waiting. And until that determination is made, whether people are going to sell out of stuff that they own or buy more to push everything up, obviously those people that have a lot of money haven't made that determination yet. It's been a wait and see on the sidelines kind of thing. So therefore, you can't anticipate what's going to happen until it does it. Remember, when I'm trading a gap, I'm saying this is going to work today, but I'm reading the price of the gap in real time. Nothing's happened here to tell me exactly what's going to happen next because it hasn't broken the base. I can see the base. I'm reading what is here. This is real. And I know what it needs to do, and if it does it, the action is taken. And I know what it needs to do, and if it doesn't, the action is taken. Okay? But don't get fooled and being seduced thinking that we're automatically going higher because these things are in an uptrend. Actually, no. Let's just look at it right here. First of all, the 200-period moving average is flat. It's a flat board. This is the greatest example of what I'm discussing with you, that there's a straight line. The 50 is curved miniaturely, slightly. The 20 is curved the most of anything, and the 8 is flat, which is the last month of trading. Look at that. Last 2 weeks, last month of trading, right there it is. And I want to make one more comment. I was discussing this in the room this week. Sometimes when I'm talking or teaching, things just come out of my mouth, and I don't even know where they come from. I see them, and then I say them. And, you know, call it osmosis, call it just me knowing how to read charts in a very sophisticated way. Stock symbols, and you have to pretend that the market is like a stock symbol, don't spend a lot of time around their 200-period moving average. They don't want to, okay? Every 200 days is a year's worth of trading. That's a lot of trading and a lot of price action. It shouldn't be around there. It should not hardly be there at all. And when it starts to get around there, what does it mean? It means there's a change in trend. Let's go back and look. I don't even know where this came from. I make this stuff up, and you know what? It's good. This is just like stuff I figured out with my gap stuff. When a stock symbol or the market starts to hover and get around their 200s, which is every 200 days, it's getting around there for a reason. What's happening? And it's one thing if something comes to something and then moves right off of it. This thing has been around here and around here and around here. In fact, it's been around here back since October, November, December, January. For 4 months, the market's been hovering around this 200-period moving average, trying to figure itself out. That means that the market is going to do something at some point in that it could change direction. Because when it's around there, it's getting itself positioned to actually change the trend of the market. The trend of the market has been up the last several years. Now, it doesn't mean it's for sure going to change the trend, but it means when it starts to get around there, it's thinking about maybe changing its trend. Doesn't mean it's going to for sure until it does it, but it's thinking about it. It's thinking about it. It's thinking about it. It's thinking about it. Let's look about what happened down here. Do you see this? No time around the 200 for this whole period, this whole year and a half. Now we come here, we bounce right off of it. Okay, remember I told you, make a decision quick, move off of it. It's a different story. I'm talking about when you're around here for a long time. When you're around here for a long time, okay? So actually we did drop in here. And then we came back up here, and then we were around here for a long time. And the market decided to lift. Stayed away from it for a long, long time, bounced. Stayed away from it for a long, long time, and now we're hanging around here again. Every time the market is going to change, this goes for anything. Same here. You can see it right here. No one taught me this. I made it up, and it's right, okay? Don't ask me why, but just trust me on this and learn from this. This is a lesson here. This is any stock symbol, the market, anything. Things do not want to be around this line. They just don't. They don't want to be around this line if they can't stand it. Because what happens is the closer they get to the line, it pulls it in and wants to crush it. And then it gets here and it has a hard time getting off of it. Unless there's so much force to get it off of it that it pushes it off of it or pushes it down. And that force would have to happen in the form of a gap or with some serious momentum, which sometimes happens when things change trend. And that can happen in the form of a really good gap, which we've seen on charts. But it has to be serious force. Otherwise, if the force isn't there and it starts to, for some reason, trade around it, it can't move off of it. It tries, it's having a hard time, it can't. In this configuration, which is what's happening now, it's having a hard time deciding what to do. And when something has a hard time deciding what to do, you step off, you wait, you let it decide first before you do anything, because no one's sure. And I will tell you that this is an action that can sometimes happen before a change in trend on the chart. So the change in trend in this case will be down because we have been going up. All right. Now, we may not change trend if we go down. We may continue higher, but until we do it, don't think it's going to happen because we've been hanging around here for a little bit too long now, quite frankly. In fact, that's why I said February something's going to happen because it's like almost too long here now, 3-4 months. We've been hanging around that 200. Where the stocks do not really want to hang around there. Even when they gap and they change in trend, if they gap to 200, a gap under the 200, a gap above the 200 and start to change trend, if it happens in a gap, lots of times the move happens in a force and then it lifts it or pulls it down quickly away from that guy. It does not want to be there. It shouldn't be there. That makes no sense. Things don't trade on the 200 period moving average forever and ever and ever and ever and ever. That means the price wouldn't change in a whole year's worth of time. That makes no sense. Things don't act like that. It's not normal. Okay? It's like pretend you're a human being. You don't spend 85% of your year on vacation. You just don't. You go on vacation and then you go on for a week or 2 weeks and you leave. You're not on vacation for 3 months. That's not normal. There's a problem. If you're on vacation for 3 and 4 months, then you're probably on sick leave. All right, you're on sick leave, and whether or not you're going to get well or you're going to be sick for a long, long time, you're going to have to quit your job. They're going to fire you. No one knows yet. All right. So do you see what I'm saying here? That's the best example I can think of right now. But the point is, when a symbol or a stock or the market is hanging around that 200, it's something's going to happen next that's going to cause a change in trend. It's going to change the trend of the thing that's going to happen next after that. If it starts to hang around there too long, then it's going to change the trend. If we stick in this area and we don't move out of this in February, which I think we're going to, but if we don't, my bias is lower, more still, okay? Because the change in trend is more likely the longer we hang here and have a hard time. The longer we hang around here, the change in trend is more likely, not the continuation of the trend, which would be up. Does that make sense? All right, this is Melissa with thestockswoosh.com. If you have any questions, please feel free to contact me at melissa@thestockswoosh.com. I have a live trading room if you're interested. Please email me for a free trial. I also teach a gap class, and it's very much based on technical analysis and sophisticated chart reading, stuff like this. You would learn a lot from me by taking my class. And if you're interested, please feel free to contact me at melissa@thestockswoosh.com. Thanks and have a good night.